And what is going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be doing some stock analysis for Take Two Interactive stock. And 10 months ago, I made a video on my channel doing an analysis, and it's one of my most watched videos. So, people must be interested in this. And so, we're going to go back and not only do revisit my analysis back then, but also do a current analysis. So, back then, I pretty much the stock was $184. Okay, today it's 236. So you would have made a little bit of money. The last year, the stock is up 30%, and you would have been up about 45% if you bought at the bottom pretty much and sold at the top last month. Okay, 45%, which is pretty good. And in 1 year, that's a lot, right? That's pretty good. But back here, when it was $184, I did not buy this, and I said I was not interested for a couple different reasons. The main one, the big one that really stands out, which is still a problem today, is the fact that net income is negative and they lose lots of money. They lost $4 billion in the last year. And this is not just like a one-time thing. They've been losing money for the last 3 years straight. So I don't like any company that loses money. It's automatically a risk for me. And then you pair that with a high valuation, and you just have a recipe for a bad investment. So we're looking at a $43 billion. Are you gonna pay? Are you gonna buy something for $43 billion, but it doesn't? But you lose money. It takes your money. It costs you money every year. That doesn't make any sense. PE ratio of 75 times forward earnings because they are expected to do $3.67 next year. And next year should be big, right? Because Grand Theft Auto should finally be coming out. If you didn't know, the game keeps getting delayed. Now the release date is November 19th, so about 1 year from today. Okay. Here's the price to sales ratio. It is the highest it's ever been, right? We haven't seen these prices in 5 years. Okay. Price to sales of 7. That's too much for me, especially considering that it was a 3 a couple years ago. If anything, I just searched to see if there was an inverse for this stock. There's not, because I would be interested in betting against this, especially there's just I feel like everything is kind of in line for this stock to fall in 2026, because I'm expecting a small correction to happen just in the general market. But would that come? I mean, if that happens, it's definitely going to pull this stock down. But that paired with the fact that this stock is super overvalued and they're losing a ton of money, I think the stock is going to go back down to probably like $178. Now, when I run numbers on this, first of all, I would not value this at this should not be trading at 75 times forward earnings. I would value this company. So let's see. Even so, their net income is obviously terrible. Revenue, the last 5 years, they've averaged 13% growth. Okay. So just mediocre, nothing special. I would value the stock at maybe 20 times earnings. Okay. 20, maybe 25 times. Let's just be really optimistic and let's say 25 times. 25 times 3.67 gives us about a $92 stock. That's about what I think the stock is worth. Okay? That's pretty much where we're at. So anyways, it's interesting to look back at my thoughts back here, and yes, you if you would have bought this at this time, you would have made some money. You would have made 40%, which is pretty good. But doesn't matter to me. I wouldn't want to own the stock. I don't like stocks that lose a bunch of money, and I don't like stocks that are built around, oh, this one thing might happen. This event is coming, and they're going to go through this one cycle, and it's going to bring in a bunch of money this one time. I don't like that. I like a very consistent business model where it's something where every year, they're offering a service or selling a product that people are really needing or really wanting, and they keep buying it. Okay, something like that. Now, don't get me wrong. Grand Theft Auto is a huge game, a huge brand with a huge following, and there's a huge demand for it. So yes, are they going to make tons of money off it? Sure, but again, it's not like something that where it's going to perform for the next 10 years and bring in more and more cash every year. That's my problem. Now, it looks like if I saw correctly on this chart, the free cash flow is positive now. Okay, so obviously either operating cash flow is up or capex is down. What do their expenses look like? We have sales and marketing has definitely been growing, right? and it just, I don't know. This it doesn't the shares outstanding. That's another thing you get when you have a company that has a bunch of debt and losing billions of dollars. They're gonna have to keep issuing shares to raise money, and it's just such a downward spiral. So again, I maybe I'll look at put. I'm not. I don't like options, but I maybe I will look at put options for this because I'm just not a fan of this really. So that is my analysis for this stock. For you guys out there that, I mean, now this is look at this is interesting. 40% revenue growth expected next year. That's a big deal. That's nice. Um, but again, how long is that going to last? What is the follow? What are the following 3 years going to look like after that? So I don't know. For you guys who disagree with me, please let me know. Like, what is making you bullish on this? Um, is it just as simple as Grand Theft Auto's coming out? It's a huge game. They're gonna make, you know, billions of dollars, and then that's it. That's why you're bullish, or you think that does that make up for the fact that they're losing tons of money? So just let me know what you guys think, and I will see you in the next video.